Well, howdy there, folks. Welcome into today's video. A lot to get into in this one here today, folks. I've got to talk about a stock that just fell 37% here today. What this means for another one of my stocks, because it's very, very impactful. So we're going to discuss that. We're going to discuss what stocks are going to likely perform very, very well into year end versus the ones that are likely going to struggle into the year end here. Going to talk about what's going on with some market dynamics out there and a few other important things I want to share with you guys and some opportunities in the market as well. So appreciate you guys joining me as always. Thank you so much for being here. Thank you for being subscribed to the channel. Busy one here today. First off, let me get something off my chest. Okay, I heard somebody say earnings season's over. I think it was on CNBC here today, and I was like, "What? Earnings season's over, baby? We got a lot to go here." Okay, we still got the most important stock in the entire stock market to report earnings this earnings season in terms of the most important stock for 2023. Right? Just this week alone, Tuesday, Rivian, Upstart, Axon, Dutch Bros, Toast. Wednesday, obviously Disney, right? Twilio matters. Affirm's going to report. These are going to be some big moves. Thursday, Unity, the Trade Desk, Wynn Resorts. You got the Jack Jackson players reporting earnings on Thursday as well, right? So when I look out there, I think there's 55 S&P 500 stocks out of 500 that are reporting earnings literally this week. When I look out there, I just say there's a whole lot of earnings still to go here in this earnings season. We are by no stretch of the imagination over with this earnings season. Just because Apple and Meta and Google and Microsoft and those sorts of stocks reported doesn't mean we're over, okay? And I'll be covering these for you guys this week, Tuesday, Wednesday, Thursday on the Twitch channel. So if you haven't followed me on there, there'll be pinned comment down there here today. Follow me on there. You can watch the last hour of trading, plus all those earnings come out. I do those basically Monday through Thursday. I start them usually around noontime Pacific time and end them usually around 1:30 to 2 o'clock Pacific time. And Nvidia is the most important stock in the stock market in 2023. And that baby still has to report earnings in a few weeks from now. So nonetheless, folks, we got a long way to go here in earnings season. We're just, we got a long way to go. We are by no means finished, okay? After Nvidia reports, then we talk about things kind of start dying down, okay? No, first thing I want to speak about here is, did you guys see what happened today? Did you see what happened today? Because what happened today just cracked me up. What happened today was the same exact thing that's basically been transpiring all of 2023. It was back to the playbook of 2023, which is the biggest of the big dog companies go green and everything else suffers. The big dogs, look at Apple, Microsoft, Nvidia, Google, McDougal, Amazon, right? Lily green. And then you dig beneath the surface, and all of a sudden you see it's Red Dead Redemption everywhere. It's skeletons everywhere, right? And that's exactly been the playbook, and that's exactly what played out here today. And so it's just funny. The stock market's been so, I don't want to say boring, because that's not really the right term to use, but it's been so predictable, right? You get small caps rally a couple days, and then next thing you know, they kind of give up those gains, and then it's the same playbook and the same playbook. And it's been the same playbook all of 2023. We really haven't seen much of a change up. Just to be quite honest, it's been the same thing the whole dang year. And to illustrate this point even deeper, right? Look at my ECOM Watchlist here today. This is my ECOM Watchlist. Etsy was down here today, 3% plus. Affirm down 3% plus. Chewy was down. Shopify down. eBay was down. The only one stock on my entire ECOM watch list that was green here today is the Giant. The Giant is amazing on. And that's it, right? This is the stock market of 2023. If we look at fintech here today, there was Red Dead Redemption out there, right? PayPal was down. We'll speak about PayPal a little later on in this video and kind of what I think is going to transpire here over the next 2 months in regards to PayPal stock. Affirm was down 3% plus here today. Upstart down 3% plus, Rocket down 5.5%, SoFi down 6.5% here today, right? SoFi, I might make a move at SoFi in 2024. I'll be honest with you guys. I might make a move there in 2024 at some point in time, but it was all Red Dead Redemption there. Look at housing stocks here today. Redfin was down nearly 7 percentage points. Rocket was down 5.5%. Enphase back to the $77, $78 range again, down 3% plus. I would not expect a rally in Enphase into year end. I think there's going to be a lot, and I mean a lot of tax loss harvesting on a stock like Enphase into year end. So, it's still a possibility Enphase could be $50 before the end of the year. We'll see what happens there. But yeah, I'm not expecting any sort of rally in that one unless just the market goes crazy risk on or something into year end. RH was down about 3 percentage points here today. United Rental, Boston Properties was down. Stanley Black & Decker was down here today. And you know what's funny is I saw people celebrating out there. What were they celebrating? They were celebrating this. 30-year mortgage rates dropped significantly last week, right? And everybody's out there celebrating this, and mortgage rates dropping to 7.82%. They were at almost 8.5% back a couple weeks ago, August 17th, right? And so people are acting like this is amazing, this is good, you know, it's going to be great for home builders and all these sorts of companies and the real estate industry. And I'm just like, what are we talking about here, man? You know, this was basically information that came out last year. Okay, this is a report from Redfin that found that about 92%, almost 92% of U.S. homeowners have mortgage interest rates below 6%. Okay, that's insane. That's absolutely insane. If we go a little deeper here, about 82% of homeowners had a mortgage rate below 5%. So the vast majority of homeowners have mortgage rates below 5%, right? 62% had mortgages below 4%. So even the vast majority overall have below 4%, right? And almost a quarter of individuals had a mortgage rate below 3%. So the bottom line in regards to this is we have basically got the housing system addicted, for lack of a better word, addicted to low mortgage rates of 3 or 4% that became customary for the last 15 years. And so you can't all of a sudden go from 3 to 4% mortgage rates, right, and jack them up to 7 or 8%. Like, don't matter whether it's 7% or 8%, it seems ridiculous in the end. And just the pool of possible home buyers are going to be very small. So we have to have one of two dynamics break here. We either have to have mortgage rates break or home prices break. I think it's going to be a combo of both, where I think home prices could continue to come down. And I think mortgage rates could come down also in 2024, and that will create a nice dynamic where they can kind of meet in the middle at some point in time. You can bottom out the housing market maybe in the back half of 2024, the beginning of 2025, something like that. But the bottom line is dropping mortgage rates to 7.8% or 7 point something percent isn't going to magically fix the housing market or the real estate market and make things go, risk on again. Not at all, folks. We got to drop this thing a lot more. If the system was used to 6% mortgage rates, 7% mortgage rates, this would be great. But we're not. We're so far from that. Okay, and so yeah, don't celebrate housing coming back anytime soon, folks. No. Also, here today, I looked at some of my worst performing stocks and my best performing stocks. And you know what I found? Stocks like Honest, Foot Locker, JWN, Avant were my worst performers here today. Those ones were all down 2 to 3%, right? And guess what all my best stocks were here today? Most of them are super cap stocks, right? So ELF was my best performer. I'll speak about ELF in just a minute and kind of the setup for that one going into year end, right? But ELF's about a mid-cap stock, I would kind of call it. Wynn Resort's about a mid-cap stock. Amazon was my third best stock. JP Morgan was my fourth best stock. And Meta was my fifth best stock. Those are super cap stocks. Super cap stocks really anything that's around a $500 billion market cap or above that, right? So those ones kind of fit I think JP Morgan's like a $400-something billion market cap. So maybe slightly under super cap, but I kind of group it in that super cap category. But this is a market, folks. The bigs are tearing it up. They do green. They go green. That makes the indexes look it wasn't a bad day out there. S&P 500 was green. Dow, I believe, eked out a small gain here today, right? NASDAQ, I believe, eked out a nice small gain. It makes it all look fine, and then you dig beneath the surface and you're like, this isn't fine, okay? ELF on a shelf. Okay, let's talk about this one into year end, okay? So first off, the price action last week was extremely strange in regards to ELF. When I looked at those numbers, okay? I listened to that conference call, and what I saw in ELF was just extraordinary. And so the price action made no sense in regards to the stock. And so I still believe ELF's going to be $120 to $140 by year end. And I have no short-term call options on ELF. And I have no interest in playing short-term call options on ELF, but I believe this stock's probably still going to 120 to 140 by year end. By year end. And when I just look at kind of what's going on there, I'm like, the price action didn't add up last week. Didn't add up. I don't know what somebody's planning or powerful individuals are planning behind the scenes there, but I was like, that didn't make any sense, man. Like, this baby is going to be a rocket ship ride here, okay? And by the way, in regards to ELF, S&P 500 inclusion, I know we speak about Palantir a lot in regards to S&P 500 inclusion. In regards to ELF on a shelf, we could probably get S&P 500 inclusion at some point in 2024 or 2025. Here's the deal. ELF's market cap doesn't qualify them right now. They're too small right now. I believe ELF's probably going to go on another big run over this next 1 to 2 years. And so I think there's a pretty high probability that ELF's going to, next thing you know, it's going to be a snap of fingers. It's going to be a $10 billion plus market cap, and they will get into the S&P 500. So I think that will be some talk, but that will be more of talk around 2024, 2025 in regards to that one specifically, okay? Palantir. Let's talk about Palantir. Obviously, that one is a lot of talk about S&P 500 inclusion, right? Lot of talk about S&P 500 inclusion. So a lot of people are wondering, what now with Palantir stock? Stock's trading at 1850. We've got another 3 months we got to wait for the next earnings, right? Which seems like forever. And so a lot of times, especially retail investors, they're like, okay, we had these earnings come out, whether they were good or bad or whatever, right? We have no earnings for a long time now. And so what happens with the stock price in the let's call it time period between that earnings and the next earnings, right? Here's what happens, okay? For Palantir specifically, and every stock's different, okay? For Palantir, there's going to be 3 impactful things for the next several months in between now and earnings in regards to what drives the stock or doesn't drive the stock. One is, do we get more news around deals, right? Either big government deals, either big commercial customer deals, those sorts of things. And those are things that shake the stock in a meaningful way. If all of a sudden you hear XYZ big company signs a $175 million contract with Palantir, it's a huge deal, right? Next thing you know, that gets in all the fund managers' heads and retail investors' heads and everything like that. And they're like, oh, they start doing some math and they're like, oh, that's a big plus there, right? And it creates momentum. The second thing is, if we get any news in regards to S&P 500 earnings in the next few months, which we might not, but if we get any news in regards to that will certainly shake the stock in a big way. And the only news we'd really get on S&P 500 is if they were to be included or something like that. Like if they're not going to be included anytime soon, then we're not going to get news, right? So that's just kind of like there's only a plus in regards to that situation, right? The third is CARP, right? I would say there's a pretty high probability that CARP does at least 1 interview before the end of the year, if not 2 interviews before the end of the year, and we'll see who those interviews are with. But I would say there's a pretty high probability you'll see a CARP interview at some point in time in the next month or 2. And so depending upon what CARP says, it's definitely going to move the stock as well, right? Plus, we still are in a time period when a lot of fund managers are going to be looking deeper and deeper into Palantir and really understand this company, especially now that Palantir is proving out profitability quarter in and quarter out. A lot of fund managers a year ago couldn't even consider Palantir before they were profitable. Now we're starting to look at this company and like, okay, they've got operating profits now. They got obviously all the profits coming in, all the income coming in from also treasuries, right? And so I think there's going to be a lot of fund managers that look at this. Maybe there's going to be some new analysts that start covering Palantir. I think there's a lot of the analyst community still has to basically start covering Palantir. A lot of them. And I think there's going to be a whole lot of them coming over this next 6 to 12 months specifically. So be on the lookout for that as well, okay? Next thing up here that's going to be meaningful over the next few months is this. Davos is coming up. It should be January 14th through the 19th. The World Economic Forum. CARP will likely be there. CARP will likely do interviews there. Okay, so that's something that will matter. Once again, that's not mattering in this calendar year. That's technically, pushing out to January. But depending upon what CARP says, that can move the stock as well. Does he talk about momentum building? Does he talk about, I don't know. We'll see what that should be a quiet period also for the company in terms of CARP shouldn't be able to basically talk anything about numbers for very much. But he could still give directional, maybe commentary in regards to that. So that's going to be very, very impactful there. Okay, so Palantir, even with no earnings coming over the next few months, there's still going to be a lot of talk of things that are going to be out there to discuss for big money and small money alike to speak about in regards to Palantir. Next up here, let's speak about PayPal into year end, because somebody, basically we talk about a ton of stocks on those Twitch live streams, right? Talk about so many stocks. Like if you love stocks and you love the stock market, like you got to be on those Twitch live streams because my gosh, do we talk about a lot. But talk about PayPal into year end, okay? I don't like PayPal into year end. I'm extremely bullish on PayPal in 2024, but I would say I'm definitely not bullish on PayPal into the year end. I wouldn't say I'm necessarily bearish, but I wouldn't be surprised if PayPal underperforms the Qs into year end. And so there is a potential PayPal stock goes up into year end, but I'm not that bullish to year end. And it has nothing to do with the numbers, has nothing to do with the conference call of the CEO. I mean, all that's brilliant. There's just more powerful things that are going on in regards to PayPal that you got to understand other than just numbers and conference calls and new CEOs and stuff like that, okay? This is what we're looking at, okay? PayPal stock has done horrible this year. The stock is down 28.5%. It's been a very bad stock this year. We all know that, right? But you've got to think about the type of investors or traders that PayPal stock is maybe attracted, right? Or might own a stock like PayPal, right? It definitely attracts more of my types, right? Which I'm an investor in the market, so I see things a little differently, and I'm not trying to time things out in terms of I got to sell this stock and buy this stock. But a lot of people are, okay? And so think about some of the other stocks I own personally. I own stocks like Meta. Meta's the biggest position in the public account. Guess what? Meta's done absolutely ridiculously good this year. It's been on a tear. Tesla's had a great year. Look at Tesla's year-to-date stock price gains. It's probably sitting about an 80%-ish type gain right now. Look at Amazon year-to-date. So look at this. This is the number one biggest stock in the portfolio, the public account. This is the number two biggest stock in the portfolio public account. And this is number three biggest stock in the public account, right? I own stocks like Palantir. All these stocks have tore it up this year. They've been tremendous, right? So now let's imagine a scenario where I'm Mr. Fund Manager XYZ, okay? And I've taken some phenomenal profits on Meta and taken some phenomenal profits on, Amazon, okay? All right. Do I want to pay all the taxes on that? Or I'm a high net worth individual. Do I want to pay all the taxes on that? And I'm looking at something like a PayPal that I might own, that I could be down on 10, 20, 30%, and go ahead and tax loss harvest. And the way, so a lot of people would view that is PayPal's, this is how they would think. They would say, well, PayPal stock's not coming back short term. So if I get out of it now, buy it back at some point in January, February, I should be fine. And then I get to tax loss harvest in that situation. I get to offset those gains I've taken earlier in the year with these losses on PayPal and play that whole game, okay? And so that's what I think PayPal is at risk to into year end, which for me is perfectly fine. I'm buying all the way into year end. I'm buying pretty much week in and week out to the year end. I will be buying PayPal stock, okay? So for me, it's great. Also, for the company, it's phenomenal because we know the company's likely buying shares back left and right now as well, okay? So everybody kind of wins in that situation. The people that tax loss harvest, okay, great for them. PayPal, if they're buying back a ton of shares in this quarter, they're great for them. People like myself that are buying back, it's almost like a no-lose situation. Everybody wins in the end, right? From whatever perspective they're trying to do. I want PayPal shares for as cheap as possible. Would I rather be buying PayPal shares for $54, $44, or $34, or $24, or $14? Heck, I'd rather buy them at $14, okay? It's not going there, but I would rather do that, right? So that's the bottom line in regards to that. So I'm not bullish. Now, what are some other stocks that I think fit this very similar criteria that PayPal does? I think dividend stocks. I've been talking to you guys about this for the last few weeks now. I think a lot of these dividend stocks are a huge risk of not performing well into year end, regardless of the market, because there's going to be a lot of tax loss harvesting. We know there's, for every one good dividend stock you tell me about, I could name 5 dividend stocks that have done horrible this year. It has not been the year for dividend stocks. Matter of fact, in my 15 years being in the stock market, this is maybe the worst year I've ever seen for dividend stocks. I've never seen so many dividend stocks get slaughtered, 20, 30, 40, 50%. I've never seen this bad for dividend stocks. And remember, we're not in a stock market crash this year. You look at the indexes, right? So to not be in a stock market crash and see this many dividend stocks bad, I think there could definitely be a lot of tax loss harvesting in these stocks. You know what other stocks I'm thinking about? Some of these small cap stocks, but it's not all of them. And this is what's important. Whereas dividend stocks, I say, it's the far majority. For small caps, it's not all of them. It's here and there, okay? And a good example of this is, look at a stock like Revolve. I think Revolve is a small cap stock, under $1 billion market cap, right? $979 million market cap. I think Revolve is at a huge risk of tax loss harvesting this next 7 weeks. The stock's done horrible this year. It's down nearly 40 percentage points this year. So I think a stock like that could continue to be weak into year end, which I would love, because I actually would love to buy some more Revolve stock. And by the way, they're another company that has a big buyback on right now because they have a freaking phenomenal balance sheet at that company. But there's no doubt that stocks have major risk of tax loss harvesting. On the flip side, there's something like a Fubo. Fubo stock is up nearly 70% this year. There's no risk in regards to tax loss harvesting for a stock like Fubo, right? The next 6 weeks, or next 7 weeks, I should say, will be just fine in regards to Fubo. You could always have some profit takers here and there, but in terms of tax loss harvesting, it doesn't make sense with a stock like Fubo. There's no reason to tax loss harvest. Now, that's a completely different story than Fubo last year, right? Look at Fubo last year. Fubo was a massive risk of tax loss harvesting because the stock did horrible. There's a lot of, we can call it bag holders or whatever you want to call it, from 2021. And so 2022 was a horrible risk year for tax loss harvesting on a stock like Fubo. And look at how horrible that stock performed in the year end. The stock price went down. It was cut in half. into year end. Between November and the beginning of January, the stock was cut in half, right? So that's the risk, is in stocks that have been going down and been going down, they could actually go down harder over this next 7 weeks. The stocks that have performed great, I'm feeling pretty confident. I'm feeling pretty confident into year end in regards to stocks like Meta, stocks like Amazon. I don't feel that unconfident in regards to those ones. Even Tesla, I don't think, could Tesla end the year under 200? It's a possibility. But, even Tesla, there's really going to be no tax loss harvesting there for the most part, unless somebody bought it, 250 plus when it was there for like a second this year, right? Now, in regards to Fubo, my Tubo, boy, do we have some big stuff going on, man. I mean, some big stuff. Check this out. Dish Network, which if you don't know, Dish Network's a massive satellite company, and they also own Sling TV, it's called, okay? Which was supposed to be a big, huge streaming player in the future, right? This stock is down 37% today. Folks, this is a disaster, and this matters meaningfully to Fubo specifically, okay? And I mean in a good way. Check this out. Dish Network stock plunges after Q3 miss, and the CEO is now going to resign from the company. Dish Network reported GAAP EPS of like a negative 26 cents that missed by 30 cents. It's like a ridiculous miss, okay? Revenue came in at $3.7 billion. That was down almost 10% year over year, and they missed analyst expectations by $120 million. Net pay TV subscribers decreased 64,000 in the third quarter compared to a net increase of 30,000 a year ago quarter. So they're losing subscribers, literally. The company closed the quarter with 8.84 million pay TV subscribers, including 6.7 million Dish TV subscribers and 2 million Sling TV subscribers, okay? This is crazy. Think about this. Who the heck's going to have satellite 5 years from now? 10 years from now? It's hard for me to even fathom somebody having satellite today, right? Like, that's just crazy. Like, why would you not have a streaming company? But anyways, think about 5 years from now, 10 years from now. How many people are going to have satellite dishes still? That's going to be almost non-existent, right? So just here, there's still about another 7 million subscribers. Then imagine how many DirecTV subscribers are. Then imagine how many traditional cable companies. There's such an almost infinite amount of TAM for Fubo to go after, and all these streaming companies, YouTube TV as well, right? Which is owned by Google, certainly, right? My gosh, they have such a long runway of growth ahead over this next 5 to 10 years. Now, also what's troubling here is Sling TVs I don't even think Sling TV is a long-term competitor. The fact that they only have 2.12 million subscribers is horrible. When you think about Dish Network as one of the biggest satellite companies in the world, they've got everybody's phone numbers, everybody's email addresses, and they can only get a little over 2 million subscribers. They're at risk of being passed up by Fubo. Seriously, look at Fubo's subscriber gains and then look at Sling TV and tell me Fubo's not going to pass them up. And that's crazy because Fubo's just a company no one heard of a few years ago. No one, 3, 4, 5 years ago, no one freaking heard of Fubo. Sling was already a pretty popular, relatively popular name 3, 4, 5 years ago. This is crazy. Also, they got a retail wireless business going on there. The firm said Eric Carlson is going to intend to resign as president and chief executive officer effective November 12th. They're supposed to combine Dish Network and do a merger with this EchoStar company, right? Which might even take less, I guess you say, emphasis on the we can call it the satellite side of the business and the Sling side of the business. So this is a disaster, folks. And I think the weakness is going to get a lot rougher for Dish Network before it gets better. I can tell you that much, okay? And so there's a very interesting dynamic where if we talk about the bundled plan, right, the subscriber bundled plan of people spending, $70 to $100 a month on a bundled cable, I don't want to say cable TV package, but an overall, television package, right? So you have all the channels like the ESPNs, the CNBCs, and the Bloombergs, and all the different channels you'd want, right? It's very clear to me that YouTube TV's won and they're going to win, okay? Very clear that they're the number one winner. And I think there's only 2 companies that are really competing for that second and third spot. I think it's Hulu and I think it's Fubo. And I think Fubo's in a better position, believe it or not, despite not being owned by ESPN like Hulu is. I think they're in a better position. Hulu has such a massive amount of overall subscribers, but so many of those people are signed up for the $10 Hulu plan or, one of those sorts of super low numbers that have nothing to do with the total TV package. The total TV package from Hulu, I believe, starts at $76 or $80, something around there. And I just don't think they're in the best position to compete. But I do think those two will fight it out for kind of the number 2 and number 3 spots here over this next 5 to 10 years. No, I was going ahead and taking a look at Hulu because I just want to see like how much of a competitive threat they are versus Fubo. I found they got a lot of problems, okay? One is they're missing so many freaking channels. So they have all the big channels, right? And obviously being owned by ESPN, they got all the ESPN networks and things like that you have to have if you have a sports package. But the problem is they're missing so many of the small little channels that if you're a big-time sports fan, you need those sorts of channels. Fubo has those channels. That's why it's the number one like streaming company. Like if you're a diehard sports fan, you got to sign up for Fubo over everything else. Like, you know, if tell me you're a sports fan, you're going to have Fubo. Just bottom line. There's nothing better. It's only down from Fubo when it comes to sports side, okay? So I was looking at Hulu and I was like, damn, they're missing a lot, okay? On top of that, Hulu does not have the Multiv View, which is a technology I think you're going to have to start to have. Fubo has that where you can choose, 4 things to put all on your TV at the same time, right? Which this is a picture I took on Saturday. I have 4 games all on there. I chose those 4 games to put on there, and I choose whatever one I want the volume to. If I want to switch the volume, I just flip the little Apple TV thing over, and boom, it switches the volume to that other game, right? Which, for big-time sports fans, like this is everything, because if you're a huge sports fan for whatever sport, you want to watch multiple things at multiple times, right? If you're a college football fan, there's so many games you want to watch at the same time, right? You got to have something like Multiv View. If you are a big-time NFL fan, you got to have Multiv View. Like this, not like you're just going to watch one game. Like, come on, you're going to watch multiple games. Imagine fantasy football owners, right? Like, there's so many players you got going on at one time. If you're a baseball fan, if you're a basketball fan, there's many games you want to watch all at the same time, right? And then it's crazy because I didn't even know about YouTube TV because YouTube TV this year, well, their exciting thing was we're coming out to compete with Fubo. We're coming out with our Multiv View. But I found a lot of like negative posts on regards to Twitter. And then I started looking in this a little deeper and I found like Reddit posts about this and everything, right? And this is YouTube TV. Multiv View is awesome, but we need a way to choose what's in it. I have heard about the reasons why YouTube TV pre-selects Multiv View. So YouTube TV is pre-selecting Multiv View. I'm like, that's garbage. I don't want to watch what YouTube TV is forcing me to watch. I want to watch the games that I care about. And I might care about this other game that's maybe in their eyes more insignificant, but I care about that for certain reasons. And I need to watch that game. So I was like, what? YouTube TV is picking the games that people have to watch on Multiv View? To me, that's baffling. Absolutely baffling that they're doing that. Like, what a mistake in my personal opinion. And I'll let them make that mistake, but I'm just like, that's just going to frustrate the hell out of people because they're going to say, "What?" I saw a lot of people on Twitter complain about this. Like, why would I want to be forced to watch certain games? I want to watch what I want to watch. I want to set up that screen to be in this game and that screen. And I'll give you a good example. This weekend, it was at nighttime. The games are kind of slowing down. And I really only needed to watch 3 games at that particular time. Then my kids wanted to watch something. So like, oh, Dad, put on something. So they saw Fresh Prince. So I put on the Fresh Prince for them on one of the screens, right? And had the volume on that while I'm still watching the other 3 games, right? And so I'm like that's the wave. Like, what if people want to watch multiple different sports? Like, if people are sports fans, they might want to watch different sports at different times. So I just like, damn, YouTube TV really messed up this whole situation. You've got to let people choose what they want to watch. And so I was just like, damn, Fubo's really got it on all these guys. If you're a sports fan, they got it on all these guys. Also, I've received some emails from Fubo recently about like upgrading the league pass for NBA. I'm not that big of a basketball fan. Like, I'll watch like playoff basketball, but I'm not that huge of a NBA fan overall. But this is just one of many ways companies like Fubo can make a lot more money in the future by having these kind of like upgrade plans and things like that, right? And I was also thinking about like sports bettors. I came from a family of sports bettors. Very close people to me were so into sports betting, and like, I was just thinking about Fubo, and I'm like, that's got to be like, if you're a sports bettor, you have to have Fubo. Like, I was just thinking about that, and there's a lot of damn sports bettors in the United States of America, I can tell you that. And I'm like, you've got to have Fubo, because you want to watch certain games, you want to watch multiple games at the same time. It's not like a person places one bet, and they're like, this was my bet. Like, no, you know sports bettors, they freaking bet on everything. They bet on like 10 games at once, and like all these different props, and all these different parlays and all this crap, man. And so I was even thinking about that, right? By the way, DraftKings stock. What a year for DraftKings stock. Up over 200% this year. Absolutely extraordinary. Crazy. So in regards to this whole situation, man, Fubo's in a pretty good position. So very excited about that one over this next few years here, okay? So, folks, a lot of earnings coming. We're going to have some insane moves tomorrow after the bell, as well as for the remainder of this week. So if you want to follow me on Twitch, see all that stuff live, and follow me, and we talk about a bunch of stocks and things like that, then join me. That will be pinned comment down there. If you're looking to apply, join my private group, get access to all my course curriculums, join the 6- and 7-figure Discord chats, all those sorts of things. Then check out the second pinned comment down there. You fill an application. We can see if we can get you in there a little later this week. Okay. Much love as always, and have a great day.